It's nice to see great panelists today. We will be discussing the crypto exchanges, and the topic of today is crypto exchanges, same, but different. I would like to ask you guys to introduce yourself, your companies.
Yeah, my name is Luuk Strijers. You might remember me from the previous panel. I represent Deribit, and Deribit has a focus on options. So same, different. Our volumes is 2/3 options, so derivatives overall, but a focus on options.
Hi everyone, I'm Mete from KuCoin. I'm working at KuCoin for more than 2 years, and right now as the head of BD in MENA. So I'm quite sure that everybody knows KuCoin here. I guess it's one of the top 5 global exchanges according to CoinMarketCap, let's say.
Hi there, yeah, Harvey here. So Bullish, a institutional asset exchange. What makes us slightly different, but different, is we combine an AMM, an automated market maker, into our central limit order book alongside traditional limit orders.
Thank you very much. I'd like to start with a question on the bear market and its effect on exchanges. Obviously, with every cycle, like new exchanges prop up, old exchanges, some of them die. So what effect did the bear market had on your exchange and in general on exchanges globally, in your opinion?
Yeah, I think it's been a tough year for exchanges, especially the record low volatility until the last couple of weeks. So I think exchanges thrive and do well around more volatile periods. But it's been encouraging over the last few weeks to see it come back in the right direction. And for us, we've really used it as an opportunity to build products that institutions wanted to see. So an important narrative now is counterparty risk, especially for institutions. So one thing we focused on getting was a Big Four audit. The other is tools and kind of technology that, as we see more traditional firms come into the market, that they require. So things like Fix API, which is a much more standard protocol that traditional institutions are used to building to, whereas crypto exchanges often have REST and WebSocket, which are great, and we offer those too. And then we've traditionally been a spot market exchange, but in the next few weeks we'll be launching perps, and as we all know, the derivatives market is much more significant size than spot in crypto.
Yeah, so we haven't really seen a bear market, to be honest, from a company perspective. So surely the volumes are directly linked to volatility and prices, so you see an overall drop. But if you look at our model, we don't have thousands of people in staff. We have 120 people now, so we haven't fired anyone. We have very healthy margins. So despite perhaps lower turnover, it hasn't been bad at all for us. Actually, the opposite. So if you look at 2021, we reached 21 billion in overall open interest at prices of, let's say, 65,000. So it's just contracts times the price equals notional. If you look at today, we are, let's say, 22 billion, a billion more at half the price, give or take a few $1,000s, which essentially means that our market has doubled. So if you look at open interest measured in dollars, it's volatile because of prices. But if you look at open interest measured in contracts, you see gradual growth over time. So it's what you call a bear market hasn't resulted in bear market performance. It has resulted in gradual growth. So of course, volatility drives client activation as well as onboarding. So it's easier onboarding client if there's a bit of action, and a bit of volatility to activate them. So we see volatility is a bigger driver for client activation than the price. You would I guess intuitively expect the opposite, but in our case it's volatility is more important. But despite a proper lack of volatility all throughout 23, except for March and the last few weeks. It has been gradually growing, so it's all over a healthy sign. Clients are coming, they're expanding, they're trading more and more. But yeah, days like this and ETF excitement, of course, generate a different vibe and activity level.
Thank you very much. And so how does the evolving regulatory landscape influence your respective exchanges and overall the landscape and also your strategies in the way you actually look in the future?
Greater regulatory clarity helps increase the pace of institutional adoption. And when we talk about institutions, often in crypto, usually we're talking about professional traders, market makers, props, and hedge funds, perhaps on the smaller side. But often in the traditional financial world, institutions, when we're referencing them, we're talking about pension funds, long-only asset managers, people who manage billions and trillions. And I don't think that they are quite there today in kind of the crypto markets that we work in here. So having more regulatory clarity, especially in the US and some of the bigger jurisdictions, will help increase the pace of adoption for these types of firms. As a business, Bullish is regulated in the Gibraltar by the GFSC, which has a very thorough DLT license, and we're in the process of applying for MECA, a MECA license, and Hong Kong SFCs as we want to be approach kind of a regulatory strict way of doing business in these different jurisdictions.
Yeah, so I'm based here in Dubai since a few months. Part of our ambition is to get a firewall license. So the idea would be the platform to be licensed here as the central hub, and then multiple brokers globally, starting with a MiFID broker next. So we intend to have that somewhere next year. The idea would be to get fully regulated in all the key regions from a platform or onboarding perspective. I think for two reasons. One is the market wants it or demands it. So it's just checks and balances, and institutional size, which is our focus area, wants us to do this. But secondly, it also enables us to offer our products. So we have been very marketing shy, and we have a reverse solicitation model. People come to us and we don't aggressively come to them. But we can organize events, put our logo on a football shirt or whatever, which we haven't done at all because of the lack of regulatory licenses. So that's our plan. Get licensed in a bunch of key regions and actually start using that license as well to do some client activation.
Poloniex was breached a few days ago for $120 million. So, and the last year also was full of different hacker attacks on decentralized exchanges, but also on the bridges and centralized exchanges. So, in the wake of the recent security breaches, how can centralized exchanges enhance their cybersecurity measures to safeguard user funds and also information?
Actually, for those who haven't heard, KuCoin was also a victim of a big hack like 2 or 3 years ago, reaching almost $200 million worth of tokens and coins. But fortunately, we've got 95% of this budget back, and we returned it to customers and also provided the remaining 5% from our own funds. During these types of crisis, let's say, I think apart from the security measures, of course, any platform, including KuCoin, would do everything to, let's say, protect customer funds and get the best measures. But I guess business mentality is a little bit more important here, because at those time of incident for KuCoin, $200 million worth of assets was a huge number. It was not just like it is right now. So could easily, let's say, go down. But if the mentality, business mentality of your platform does whatever it takes to protect that funds, return them to customers, even if it happens again, it will result with the same good outcome. But if you don't have this mentality, you can easily give up. You can say that I cannot save $200 million, or I don't know, maybe more, and you can just go on your way, you know. So despite the fact that the hack attempts will continue to occur as the technology develops, we cannot stop at some point that they will not try again. But taking the relative measures and having this type of mentality would save any business from those attacks, in my very humble opinion.
Yeah, I think it's just key for exchanges invest in technology, cybersecurity, and people. I think what you're seeing from institutional exchanges is rather than investing money in naming stadiums or football teams or F1, you're seeing them invest in people and technology. So if you look behind the hood, people have got a very thorough and big cybersecurity team. They're kind of buying the best-in-class technology, because at the end of the day, the role of an exchange is to protect consumer assets, is price discovery and a matching engine to match buyers and sellers together. I think that is where we are kind of coming back to and retooling as exchanges, especially as we focus on institutions.
Yeah, it's difficult to disagree. It's fully aligned with our view. We sadly can no longer say we haven't been hacked. We had the same problem a year ago. Very painful for, let's say, your own pride as well as a reputation, as well as a massive wake-up call. So we already had very strict policies, procedures, and models, but we extrapolated it like 100 times, making the system like a Fort Knox in terms of accessibility, but it also makes it less. The ease of use, at least from an operator, becomes more complex. But yeah, so security is more and more important. The access to those security tools is more and more important. The way you treat staff, the way staff leaves the company. So how fast do you off-board staff? What is your access policies? How are your access policies globally? How can you enter the office? What are the fingerprint, eye scan stuff, all of that stuff, the security is stepping up and more and more and more, and that trend will of course never stop anymore. It's highly technical, which means there's lots of technical people also trying to take advantage. So you have to arm yourself against it. So if you look at the size of security teams within Deribit or wherever, those will be growing more and more, and making the setup, I guess, more resilient. So it's also like a powerful thing to have. But it's I think one of the nasty parts of this business is the fact that it's all open, accessible, which attracts also people that try to take advantage of it. So yeah, sadly, I expect to see those hacks happening tomorrow as well. It's almost a part of doing business, which of course it shouldn't be.
Very, very interesting thoughts, and I also agree that you cannot prevent attempts from happening. You can only learn from your mistakes and learn from the other hacks, and preferably in real time, and upgrade your security. So, but those attempts will happen always, and it's interesting you mentioned is human element sometimes is the most critical element to control.
Yeah, I mean, it's interesting you say human element. Like, hackers come in all different shapes and sizes, even people impersonating on LinkedIn as recruiters is something we've even noticed. So you have to be completely aware on all different fronts and really invest in your security policies.
Absolutely, and education of your personnel is the key to prevent like even technical problems in the future, right? And coming to this side, after FTX event, a lot of people became aware of the unfair trading practices that was on FTX with regards to Alameda. So how do you think the centralized exchanges can address these concerns about market manipulation and ensure that fair trading practices are actually upheld on their platforms?
Actually, transparency would be a good answer for any activity, including hacks or this type of negative behavior, because as we mentioned, the human element can come in different shapes. Every time the entity must be not the responsible one, maybe an employee, maybe a third party, I don't know. So in this type of actions, as I mentioned, we are trying our best to keep our transparency. Also, I guess after FTX, these reserve proof of reserves, let's say PORs, have been very famous. KuCoin is not an exception. We are actually delivering monthly POR results. This could be a good step to start POR, but if you ask, is it the final step? Of course not. POR reports are, I don't know, easily manipulated by, let's say, bad behavior parties. But it's a good start. But again, the majority of the solution of this problem will come from the education of the users, I guess. They should be aware of the security measures or, again, business mentality, like I mentioned in the previous question, of the platform that they are proceeding their trading activity.
Yeah, I think it's down to investing in the relevant technology and market surveillance tools on your exchange. So you can build alerts and flagging systems to detect things like wash trading and spoofing. And I think you make a good point about education. I used to work at CME Group in both London and Hong Kong, and noticed that a lot of the market surveillance abuses were coming from two regions. In Asia, we hired some compliance and market surveillance colleagues who spoke the local language to kind of explain and give education sessions on rules around market surveillance, how not to reach it, and we saw a significant drop in those actions being taken. So I think it's a number of things. Yeah, as you say, education and kind of building the relevant tech within your exchange to kind of prevent these things and flag them too.
Yeah, I think it's about the design of the platform. So it's I think some platforms have built faster gateways, easier access, and essentially dodgy routes, which give unfair advantages. I think is terrible, and it should never happen. But I also think you shouldn't trade against your clients, which also still happens. I think in a transparent world, or getting more and more transparent, we pride ourselves in taking, let's say, the decent approach over time. So we've never had any trading desk. The infrastructure is completely transparent and accessible for everyone equally. And we have, I think, or I hope, a good track record in doing the right thing. But the regulation will help, the external audits will help, the verification by some vendors will help. But we need to get rid of all of this gray or actually red areas in the crypto space. I think if you look at some random statistics website, you see names you've never heard of. I think it's terrible. It jeopardizes the industry. It jeopardizes all of what we're building. There shouldn't be names in there with billions of volumes that don't exist. And if you look at the charts, it's obvious that it's scams. It's obvious that it's non-existent volumes, and it still is condoned, and we all think it's like somewhat normal part of the deal. It's not. We should get rid of all of that stuff. It should be public, it should be transparent. These numbers are incorrect. This exchange has dodgy infrastructure. They steal from the clients. It's the evolution. What we're seeing after FTX is not only impacting FTX, it's impacting all of us, and it's also impacting the weaker or the trespassers, essentially, and that needs to stop at some point. We've been long enough looking at all of this madness, and it needs to be cleansed a bit.
Our panel comes to an end, and I would like you guys to have a final word to our audience and the guys who are watching us from online. So what would be your key insight from this panel itself, and maybe final word towards the audience, starting with Mete?
I guess for me, the catchword of the panel, for my part, would be business mentality. You can not eliminate the human factor in any technological development, but with appropriate education and with the maximum effort to get, let's say, needed measures can prevent many things, I would say.
Yeah, I think exchanges are going back to their roots, or at least the proper exchanges, providing secure, reliable, deep, compliant markets with equitable access for trading. And I like your comment on having transparent API docs with everyone has the same kind of roots to the exchange. It's something we firmly believe in. But yeah, exchanges is something I've always been part of, and excited to be in the space, especially in the crypto market, because we are building innovative products. We do things 24/7. How difficult is it to run a 24/7 exchange, whereas other venues in traditional markets can pull down their exchange to do maintenance? We have to kind of build alongside that. But yeah, I think it's exciting places to be in, especially as we've seen the real institutional adoption grow.
Yeah, I agree. It's I think a very exciting space to be in. Like you, I've been in the exchange industry for quite a while, and I've worked for SGX for 4.5 years in Singapore, which is like an incumbent exchange, 5 days a week, batch jobs at night, post-trade stuff, early morning cycles, all of that stuff. If you see how far we've come and what we've built and how we keep developing it with very limited downtime, occasionally a few minutes to do new stuff, hot releases, while being operating, implementing new changes, it's in real-time risk management, margin calls, all of that stuff. It's I think like an amazing industry to be in. So I think what's next is a continuous flight to quality, whatever the quality might be. In our case, it's derivatives with a focus on options. So we will have better books than we have today. Tomorrow we will have tighter markets. We will have deeper books. We will have faster matching. We will have lower latencies while growing, which is quite a spectacular thing. So I know that we can be faster, we will be faster, we will be offering more, and that trend is quite special. So yeah, those are my closing remarks.
Absolutely. Thank you very much, dear panelists, for great discussions, and hope everyone else enjoyed it as well. Thank you very much.